So thanks everybody for coming along and attending tonight, and I'd like to thanks to John Robertson of Ideal Financial Group, who arranges this and allows us to have the possibility of doing various webinars and me to produce the advice that I give to various people as I hold them and hold their hands and help them through investing in their self-managed super funds, trading in their futures trading in gold and various markets. And we're getting going right now. So be aware that we're talking about gold. Back on the 19th of July 2012, this is me telling that Switzer that the Dow could go to 16,800 and probably higher later on. I didn't think it would get to that area this quickly. So sometimes you can be wrong, even though you might have the right view. You might not have the exact timing. Sometimes you have the timing but not the price. Sometimes you have the price but not the timing. So nothing is perfect. And a warning is that people won't believe you, like Switzer didn't believe me that the Dow was going to 16,800 at that time when the Dow was so low. So what are we doing tonight? We're looking to train the chartist and train yourselves to pick turning points, limit your risk, protect capital through Elliott Wave. We're going to have a look at a bunch of different markets in gold and probably some US stocks as well. We've got a few questions for them. Here's our warning and disclaimer. This is issued by Ideal Financial Group Proprietary Limited, which is an authorised representative number 299753 of Aruda Proprietary Limited, AFSL 338674, and Ades Trading Proprietary Limited. This information has not been provided for your specific circumstances or needs. Please be aware that really this is something that you need to be aware that some people are not cut out for trading, some people are. Some people have enough money to trade with or invest with. Some people, if they're investing small, that's fine. Trading and investing are risky and involve the risk of loss, and so you should consult a licensed investment advisor before making investment decisions. Past performance is no guarantee of future performance, and please read the product disclosure statements issued by your advisor, broker or market maker before trading and consult them as to the appropriateness of trading for you. Blah, blah, blah. So here's what you can do. I will call for questions when I'm able to, when it's appropriate. Please don't ask questions before then, and it just makes it a bit cleaner for the screen. If there's an emergency, certainly tell me, but otherwise wait till I ask for the questions. So what you can do is you can click on this little hand mode here and then type in the questions into the log. If you want to raise your hand, press that hand there, and if you want to come in with questions, this is the question to send it via. So here's what you're going to get. Basically, if you help enough people in the markets, help enough people in life, you'll get. The Profit Hunter Group came from me just wanting to put when I thought the markets would be in turning points. I was doing that in the financial reviews to help people out, and the only reason I was doing it was because I thought it would help people out, knowing when turning points were, seeing as I'd done that since 1993 with reasonable success. And people call me Mr. 70%. They say 70% of the time I'm right. And this has happened in two separate studies, and that was about 3 years ago. I was sent the results by Profit Hunter Group members. The one study said about 70%, the other one said 71%. Other people who have logged it haven't sent me the whole studies. They call me Mr. 70% because they see that 70% of the time I'm right about where the market goes to or a stock goes to. So, and then one day I get a phone call from a gentleman. He says, I've been reading you in the paper and I think you're pretty good. I'd like to pay you for advice. And I said, no, don't worry about that. Please just listen to me in the paper, read what's in the paper. And he said, no. I want to pay you, and I want to pay you a good amount of money because I've made a lot of money on what you've said. I said, okay. And he was a high net worth individual, so I started off doing for that, and then a couple of other people who were fitting into the high net worth individual category. And eventually a few more people asked, and I got licensed, which was one of my fears, which was dealing with licensing and all that sort of stuff. One in the high net worth individuals at that time, you didn't need to have the licensing that you do for retail investors and traders. Anyway, so I ended up creating a business from doing what I love and helping people. So you might do the same. So what did we get? Learn when to hold, when to fold, how to judge market strength, and when to pass up a trade. Now that can be important because your capital, both emotional and financial, is very important to you. The more trades you put on, the less capital you have, both emotionally and financially. There's also a limited amount of time you have in your life and a limited amount of concentration that you have on your life. So passing up on the bad ones, or at least getting rid of the bad ones by folding, ones that aren't working, can free you up financially, emotionally, and time-wise to go to the next trade. And I do hope, and this is a bland statement, and I understand it to be a bland statement, so discover what's most useful. What's useful for what? Useful for you is the primary driver on that one. So I'd like to know, are you an investor? Please raise your hands if you're an investor. Who here is, how many of you are an investor? And I'd like to know here, how many of you are traders? And please raise your hand if you're a chartist, a pure technical analyst who neither trades nor invests. Do you manage a self-managed super fund? I'd like to know. Have you ever done an Elliott Wave count before? And please, it's a little bit scary not knowing what an Elliott Wave count is if you've never done it, and I understand that fully. It can be a little bit confusing. Are you an advisor? A lot of Profit Hunter Group members are advisors to other people as well as managing money for other people. So, are you a fund manager? And if you haven't raised your hand, how many of you haven't raised your hand? Please raise your hand. So I put it in the paper. I've called the top two actually within one tick on this 21st, actually the 21st of April 2015. The top was on the 15th. This is in the paper, I think, the 21st. It might have been a few days later. Notice this is the 15th, 16th, 17th. So they published it within 2 trading days of the top. I actually put it up there and the market collapsed. I like doing that stuff. And that was the result. That's the day of the top, and bang, down about 16% in 45 days. So BHP has been twice up to this $50 level. It still hasn't got through that. On the first top that Catherine Davies on me, I called also the second top, and also the bottom at $25 and $20. I was looking for down to 25. We bought the bottom $20.39. Now I discovered Elliott Wave a little bit by chance. I actually won a book in a prize in 1991, but I discovered Elliott Wave in 1988 while trading foreign exchange. I discovered GAN before that, and Deputy Treasurer Foreign Exchange at Qantas, and I noticed they're riding down the planes that I used to fund back in 1991 and 1992-3, and that area, they were new jumbos then, and they're very old jumbos now. They needed to write them down in a hurry. Proprietary trader Macquarie Bank. I was able to trade the bank's money whatever I liked, whichever markets I liked, whatever I wanted to do. So I've been knocking around in foreign exchange and financial markets since basically 1980, including my own share investments and purchases, and been basically able to trade whatever I want, whenever I want, for the time that I have been. Started off professionally as a kid at age 23, 24, and it's now 30 years worth of trading and being involved in the markets. It's really all I've ever done, and that's what I've trained myself to be, as a technical analyst. And Caroline saying, thank you, yes, invested with your help in the banks, so happy. Yeah, thank you. Okay, so thanks, Caroline. I hope your trip's away. You're always in India, aren't you, these days? Went off and meditating and yoga and stuff. So, fund management. I've been in fund management, been a portfolio manager, managing over $4.5 billion bond fund for what is now Aberdeen Asset Management. I managed to actually be fired from this company for making money for them. The words are, David, you're making money for us, but we're going to have to fire you because you're doing the opposite of what the Asset Allocation Committee decides. So I was looking at down the barrel of these 12 other professionals in the markets and doing the opposite of them and actually making money for that fund. They didn't like it on an ego basis. They didn't understand that egos were important to fund managers, and they also like predictability. So they were the best performing bond fund for a year after they fired me, because I put that bond fund short at the top of the market, and the interest rates went up and the bond prices went down hard. So you can be, as I say, you can be right and have the right reasons and the right heart, but things can go wrong. If you find that because I've been fired from that company as a fund manager because I've been making money for their fund holders, then probably you can leave the room now, because I can't help you at all, and you probably won't understand me that well. So what have I done? I've trained repeatedly by bringing them out to Australia with guys like Larry Williams, Jake Bernstein, original turtle trader Russell Sands, who taught me how to trade. Larry Williams, one of the best traders in the world that I've seen publicly trade and make lots of money for people and share it with them at the seminars. Larry is genuine and real. People talk a lot about Larry Williams. He traded $10,000 into $1.1 million to win the 1987 Robbins World Cup Championship into my knowledge, in a feat that has not been repeated. $10,000 into $1.1 million I used to bring into Australia all of the time from 1996 to 2006. Every couple of years I learned a lot from Larry, went over to see his $1 million challenges in San Diego. That's Larry there. The little guy here is Jake Bernstein, one of the most prolific book writers on technical analysis and trading in the world, and certainly one of the smartest guys for understanding cycles and psychology of markets. And that's me in my younger days with a bit more hair, looking a little bit more crumpled. Also Glenn Neely, who was a champion, best in the world at Elliott Wave. He created a thing called Neo Wave. Yeah, there was a little bit of confusion there, Tony. It was a bit my fault. The system came up at 7:30. Founding member of the Australian Technical Analysts Association at APTA, director past ATL, past of APTA, president of APTA, past vice president of ATAA, blah, 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 blah. Basically, I could do better, always my teachers, and my dad was a bit of a gambler / semi-alcoholic, loved to smoke. I cannot understand how people can spend $140 a week. If you have one packet a day, that's $140 on cigarettes. but my dad did the equivalent of probably about $350 a week in cigarettes. He was quite an aggressive smoker, and he liked his scotch and he liked to gamble. So we always were wondering if we were going to keep the house, and I was always getting knocked on the door. I was the little kid answering the door, and the police going and the bailiff going, "We're going to serve your papers here to your dad. We're taking your house away, and your house will be sold." Eventually it was, and I moved out and never came back. I would have been classified as ADHD. My concentration span is my attention. I notice a lot of things, that I get distracted by things. Blah 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 blah. That's enough. Blah blah blah. He was my supervisor for most of my honours year in economics. Yes, I have an honours degree, economics honours. Did I find that useful in the markets? No, not at all. In fact, it's a hindrance. So when people say you don't do fundamentals, yes, I do. I look at cycles, I look at the economic structures, but I do not believe that you should be using economics to trade in the markets. Yes, you should be using fundamentals, but economics is history. I've worked in public servant for 4 months at the start of my career, and also as a bonus I've lost $10 million trading in just 6 months trading currencies. So that was in 1989. Worst experience of my life. Best experience of my life. Well, one of the best experiences of my life. It's a pretty good experience, if you like. Making $65 million in the preceding 2 years before that, to end up being up $55 million on what I was doing with the currencies, the Aussie dollar, at that time. So what do I do? Why do I do it? I love it. I really enjoy this. As I said, I started doing this just because I like doing it and I wanted to help people. Now, legally, ASIC and government regulators don't understand that helping people, so they want everybody to be licensed. So what that means is they require you to have lawyers and pay lawyers, because ASIC obviously is run by lawyers, and lawyers advise ASIC to have more lawyers employed, which costs a lot of money because basically lawyers need a lot of cocaine to survive. So we end up having to pay high fees because lawyers need cocaine. That's just one of my biases, but unfortunately I've seen it too true to be remembered. The other reason is that lawyers use cocaine, the high-profile ones, and I hope I'm not destroying anybody's belief in me or whatever, but I learnt just recently, and this is why footballers and lawyers do it, is because it goes out of your system within 3 days. Drug tests, apparently, they take the hair and cocaine breaks down out of that. So if you understand what goes in the high law firms, that's what they do, why they do it. Anyway, I love turning losing traders around. If you're making lots of money at the moment, you probably don't need me. What I've found, though, is people who are doing reasonably well, who want to step up, enjoy what I do, and also people who are losing and have the experience of losing money, and at 2 years, 5 years of experience in the markets, they tend to be people that I work with best. So if you are a beginner, I would ask you to just look at what I'm saying here. Don't worry about any of the things that you can do with me later. Those things can come later. I'd rather you sit here and learn a little bit about what I'm going to give you and an Elliott Wave and some structures and tools. You can watch me for later, but please don't think about buying anything or becoming a member if you are a beginner. I want you to spend a bit more time learning, and these Elliott Wave webinars are where you can learn a bit from what I do. And I suggest if you've got other people to have a look who are trying to teach you something or coach you or advise you, if they do something for free, see what they like, and then you can make a decision. So why I do it? So my boys, this one's in Sweden, this one is doing sports science. Actually, he's in Norway, They're about 6'5" and 6'2" or something, towering over me. One thing that I love to do, is go surfing and look after my wife, and go Azad, and she loves good stuff and lots of friends and entertaining and all that sort of stuff. So why I do that. And the other thing that I like to do is support charities. Muscular dystrophy is what my little brother Peter died from at the age of 13. I was 21 when he died. It was something that we knew he was going to die of eventually. And so I like to look after the kids and entertain them with charities and stuff like that. Plus, I really just like going surfing and skiing. So what is your biggest fear in trading, please? I'd love to know what your biggest fear in trading is. If you can write that down for me, put it in the answer box. That's my question to you. What is the biggest fear in trading that you have? Okay, losing money, dropping dollars, lots of fear of loss of capital. If I can teach you anything, it would be not to lose much of when you lose. When they call me Mr. 70%, that means that 30% am I wrong, and you lose money. There's nothing you can do about it. It's like breathing in and out. If you keep breathing in and breathing in, eventually you have to breathe out, and that's like occasionally you'll have some losses in the market. Tony has probably the best answer I've seen. After a losing trade, finding that I have done something stupid, and that's a very good answer. I like that one. Nick is saying getting stopped out and seeing it soar. Nick, what I can say to you is you can always get back on your back on your bike. And what losses are a part of trading and investing, as Don says. Thank you for that, Don. You can't get away without risking money. You are risking money every time you trade or invest. So having that fear, I think the fear is, one, losing more than you can afford. So by all means, take a trade. If you're scared of it, trade less, trade a smaller position, work out a tighter stop loss when you can get in there. So losses are definitely trading. And losing money through inconsistency, thank you for that, Stephen. That's a fantastic. This is a real, the inconsistency is the issue. And when if you get stopped out, some of my best trades have come from me going, I'm stopped out, shit, I just have to go with it and get back on my bike and go with it. And when you're actually working out that you are doing something doing something stupid, losing money because you're doing something stupid, the great thing about that is that you start to learn. And panicking in a trade. Panicking is often because you're looking too closely at the market and you want to get out. So losing money by not setting a stop loss. That's what I do all day for people, as you know, Gordon, in the Profit Owner Group. Every trade I give, every time somebody asks me whether they, what they should do with the market stock, I give them a stop loss. So losing too much money by not setting a stop loss is a good fear to have, and so that will keep you doing the right thing by putting a stop loss in so that you don't lose too much money. So stupidity, inconsistency, panicking, and not putting a stop loss on are the key, the true fears that each trader should have, and manage it that way. So panicking is look less at the markets, set a regular time for looking at the markets, put your trades on, put your orders on, and go away and go have something else to do. I talked about Larry Williams. Now Larry Williams, he walks in, and it really is a classic classical thing. I'll come back to this one. Bang. Hopefully go back through here. This guy, Larry Williams. You know, he's a guy who trades real money. So does Jake, in front of people as he does his seminars. Larry will sometimes just, in those seminars, he'll put his orders on. He go, that's it, we're going to the pool. Because he says there's nothing else I can do. I just have to give myself up to the market. And the more that he looks at it, the more anxiety he creates. Every time you see a price change on the chart, I'm a hero, I'm an arsehole, I'm a hero, I'm an arsehole, as the price fluctuates up and down. So don't jump into the market with no idea. Don't have a clearly defined and documented trading plan. If you want, these are things you want to do if you want to lose. Don't trust your own ability. Make trading too complicated. Not understanding money management. That's what I learned from Russell Sands. Misusing margin and leverage. Confusing timeframes and trading strategies. Not having a clearly defined exit strategy. I give targets and stop loss exits that are take profit trailing stops for my PHG members. Not having a clearly defined exit strategy. Averaging down. Lacking discipline. That's the panicking part. Emotional and subjective trading. Overtrading, operational errors. We won't go on with the people who, these are one of the few starting people of the Profit Owner Group. A little bit about me. You've heard that I've surfed. I'm pretty lazy. I was just in a very famous surf break with big waves over last week. And you can have, there's a section of these waves where these waves just are amazing, really. And my friends asked me to go there back in 1976 and 1978, and I didn't go. I probably should have, but these sections of the waves, absolutely perfect. There's an absolutely perfect section of these waves, and there are waves along about a 2 kilometre stretch where they sometimes link up, and the crowd is in the absolute perfect area, but the perfect area is where the waves aren't as big. And I gravitated up to the end where, way out of the way, where there was, just probably 10 or 15 people on the much larger waves, because I love catching the bigger waves, because most of the time, because as I get older, I have to be lazier because I'm not as fit as I used to be, and a bigger wave carries me along better. I live in Phillip Island and Bondi. We move between them, and in Phillip Island, that was a couple of Saturdays ago. It took me 6 minutes to get into all the rubber because it's so cold. Bondi's a little bit better, and the same thing applies in. I like the big moves, and I'll sit in positions for a longer time. I'm not really a day trader unless it's during January, when people aren't bothering me about the markets as much because everyone's on holidays. And I like the big moves because they go further, and basically if you can sit in positions for a long time, there's not much you need to do. Just sit there and be good. One of my best trades, Macquarie Bank, was along the US dollar Deutschmark, which is the German currency, as you may have realised. And I had this trade on. I went to France for a conference, and I put the trade on before I left, and all I did was just move my stops off when I got off the plane in Singapore, rang up, where's the market? Oh, good, here's the stop, bang. Went to London, raised the stop when I got off the plane, where's the market? Raised the stop. And for the next week or so, all I did was ring in once a day and found out where the market was, raise the stop, made tons of money from Macquarie Bank out of that trade. It was just awesome. Those are the trades that you want to get, because really there's nothing else you can do once you've set your plan. If you change it, you ruin yourself. So stick with the plan. In terms of Elliott Wave has its roots back in the Fibonacci numbers, Leonardo of Pisa. There's a book called, or Pisa. There's a book called Fibonacci, and it corrupted that into, or Liberace, and that corrupted into Fibonacci, so Book of Leonardo, and it was about how rabbits multiply, and he got that from the ancient Arabs. Anyway, basically, in terms of Fibonacci, for those of you who haven't heard, I'm sure many of you have. Who has heard of the Fibonacci ratios? Please raise your hands. Great. And who's not? Type in if you have not heard of the Fibonacci ratios. Type in no if you haven't heard him. How many of you have not heard of Fibonacci ratios? Anyway, what you can see here is it's a geometric progression. So 1 and 1 is 2, 1 and 2 is 3, 2 and 3 is 5, 3 and 5 is 8, and 8 and 13, 21, blah, blah, blah. And as you get further and further out, 2 and 3 relates in the ratio of 2 to 3. 3 and 5 rates at the ratio of 0.66. 5 and 8 relate at the ratio of 0.618. 8 and 13 relate at the ratio, 0.625. 8 and 13 have, and as you go further out, this tends to a ratio of 0.618. When you take the reciprocal of 0.618, you come up with 1.618, which is the golden mean that we see in Greek architecture. And this is the reasons why Greek buildings, if you go to America, a lot of the government buildings up, and government buildings and also the Federal Reserve, they're built on these sort of principles. The Masons took them to the world and made beautiful buildings out of them. W.D. Gann was a 32nd degree Mason. And Pravin says also with Indian architecture, and I didn't know that, Pravin, is it embedded in the Taj Mahal as well, because that's a very beautiful building. When you're looking at these buildings that are beautiful to the eye, generally they have a symmetry. When you look at a human body, if you take the belly button, that is usually the 0.618 level from your feet to the from your feet to the belly button, and the rest of it is 0.382. When you divide up your hands, you also have ratios of 0.382 and 0.618 in your fingers as well. In the segments of your fingers, and also the golden spiral and flower petals, etc. And Pravin says it's going back thousands of years in temples especially. And also the Nazis took the swastika and polluted it, but the swastika, if I remember rightly, was important for Indian philosophy as well. And it's a bit of a corruption of the spiral that you see in nature. So they have the golden smile, golden mean. The guy Elliott Wave took it, and he created, R.N. Elliott created the work of Nature's Law, The Secret of the Universe by R.N. Elliott, and then that was in the 30s. He was an accountant for the US government in South American Republic, and the legend is that he was sitting around at the beach. He liked the stock market, but he saw the waves coming in, and he likened the waves of the market to the waves of the beach, the waves of the ocean. So in or about the 1980s, A.J. Frost and Robert Prechter came up, reproduced and actually published the Elliott Wave principle and the major works of R.N. Elliott to popularise this. Now, I recently heard that Robert Prechter again, and somebody said was, I saw a newsletter by, I think it was the Agora people, or whatever they're called in Australia, Port Phillip Publishing, and it was saying that Robert Prechter has issued a forecast that the Dow's going to collapse down to 400 and the whole world's going to die, all that sort of stuff. He's been doing that for, I think, about the past 20 years, ever since 1987. And he's a very smart man, but his calls have not been so good. Don't get carried away with this stuff. We're looking at probabilities. If you listen to Robert Prechter, you probably, in those calls, the public calls, which are frightening calls, it won't do so well. But one of the Philip Publisher article writers received a letter from one of his readers talking about how Prechter had said this. But Prechter's like a broken record. Please don't adopt a fixed position with this in the markets. Things change. The great thing about Elliott Wave is it shows you when things are changing, and you won't be caught at the really at the top of the market if you follow Elliott Wave and look at those probabilities as you run through. So it is good. Here's something that I thought was particularly cool. I wanted to show you, and it's from nefficode at blogspot.com.au. And notice here there's little elephants over in the corner here. This is pre-Columbian, which is South America, and Ecuador. You've got elephants there. How did they get there? How did they get there without knowing not being in Asia or India? That's a good question, isn't it? Well, this is gold, a bit of sun, a bit of a pyramid, and all sorts of symbology in this stuff. They say Paleo-Hebrew characters, so that's curious. Anyway, let's look at the building blocks of Elliott Wave, and here's some basic tenets of Elliott Wave. Elliott waves are fractal in nature. What does fractal mean? It means it's like a babushka doll. It's one of those dolls, Russian dolls, which when you open up the big one, you find a little one inside it. When you open up the next one down, you find another one down, and another one down, and another one down, and another one down. So smaller waves are part of larger waves, and they telescope in and out. And what that means is that we're able to, if we're confused about an Elliott wave count, it means that if you can't work out what it's doing on the higher time frame, you can move down the lower time frame. If you can't work out what's going on in the lower time frame, you move up to the higher time frame and say, oh, that's interesting, I get some clarity. There's another thing which you can do for people, and let's go to a line chart. So for clarity, you can look higher or lower if you're confused. The great thing about Elliott Wave is the fast moves are impulsive waves or trends. So basically, a trend is something like let's talk about the Sydney property market. The Sydney property market has experienced gapping price action. Now what that means is it's been a runaway market that when you blink, places are sold before they go to auction. So you don't see open market discovery because people have offered prices higher than the vendors expected. So you might have seen a 3-bedroom unit sell for $815,000 in November last year, now selling for $1.3 million without much trading going on in the public eye. That's called price gapping. That's an impulsive move or trend. If you're not in there before that happens, you're stuffed. Either that or you pay up and live with the fear of buying the top of the market. So a wave starts when the nature of buying and selling changes. In other words, one side gets stronger, one side disappears, one side shows a lack of interest. In the property market now, instead of prices being sold at auction, which they have been, now that recently it came in that places were being sold at auction. That means that buyers were not pushing past the vendors' the seller's expectations, so they weren't actually bidding them up $200,000 or $300,000 above where the vendor expected to sell at, and just going, oh well, I'll just sell it before I get to auction. Now what we're seeing is those auctions those auctions were strong for a while. Now they've actually gone, oh, the auctions, they're not selling at auction, and then they're dropping back into being for sale now for a couple of weeks. So the market is having that overboil. This was the top of the third wave. We won't go through this one on bigger cheese. Let's look at a classical Elliott wave pattern. Wave 1. The market starts off here at wave 1, and we don't know much about the market. All we know is that it was created. In the beginning, there was the market, and we see here it starts off here, and it goes up, and we call that wave 1 because that's the genesis of the market. The next one we see is a thing called wave A, because the market pulls back a bit and drops down in wave A. 1. We take notice of the top of wave 1. Why do we do that? Well, one thing that happens in the top of wave 1 is the economists, the fund managers, and all those sort of people who are professional money managers will tend to wait till this market gets in at the top. Why is that? I don't know, but they just don't believe anything. It drops down for wave A. Generally, wave A will drop a certain percentage. We won't go into that. And then there's a rally, a B wave, and often B waves will retrace 50%. Sometimes they'll retrace 100%. Sometimes they'll retrace 80% of this move. And we actually saw that recently in the S&P 500 over the past couple of days. We've seen that sort of A-B rally, which was lucky last night. And then we saw a C wave to the downside. We see a C wave to the downside. And overall, this entire ABC pattern is often retraced 61.8% of that prior move. So this would be a C wave sitting right here. And that C wave will retrace on average 61.8%. Sometimes it may go a little bit further, and sometimes it might go a little bit shorter, but generally it'll average around about 61.8% retracement. Is everyone with me? So just to recap, we see an ABC pattern to the downside. We take notice of what the bottom of A is, the end and the top of wave 1 is. Those two green arrows are the things we want to point out. These are really important if you don't get in on the bottom of the C. And that's okay. So we get ABC, we get ready for a move. And if you don't get in on that, around that 61.8% on average with a stop loss, you can have a wider stop loss down here. You try and get back in at the bottom of A, where the start of the B wave is as it breaks back through. So you want to be buying on this wave, because the next move up is either wave 3 or wave C. Even if this is an ABC pattern, it's still an impulsive, lovely move to trade. This is the move that you want to get in on. The C wave, ABC completion, or wave 2, what's called wave 2, when we get wave 2 here, when that happens, we get the next big move up. Wave 2 has about a 40% chance of making you money. The wonderful thing about that is that you get a ratio of 2 times, 3 times, 4 times your initial risk, or even 1 to 2 times this entire wave as your target. So I really, really love getting a hold of this wave 2, because the juicy thing where you make your money without it looking back is in wave 3. Now I'll go back to the property market. Back in August of last year, I could see that the Bondi property market was ready to go. So we went to auction. You could see that there were people pretty keen to buy, and made sure we could buy this place for a very good price. It was a great price, and the market then took off from there. And that was a corrective pattern back from the 1990s, sorry, the 2001-2 area, when it topped out then. It corrected for quite a number of years, and now it's taken off again. So wave 3 is the best thing. It's really where the party is. Everybody starts making money. You can't see the graphics yet? Well, you should be able to follow. So we see the next markets drop back down. Once it gets to wave 3, everybody's making money out of the market. They're all excited. Everyone's doing investing. They're doing courses. We haven't seen that in the stock market, but we're certainly seeing a lot of educational things in the property market. So the property market, it's the time where people are just going, oh, okay, I'll put down $5,000 and I'll learn how to do property with people. I know quite a few people who have become teachers in property. Now, that means the market is pretty crowded. When you see the television, all you see is about property. I suspect that property is in a wave 3. Stock market, different story. Maybe in the US, we don't have the level of speculative activity that we need for the stock market to be at a wave 3 top. Eventually, everybody's bought like they have in the Eastern Suburbs property market that I can see from my casual observations. We see a wave 3 coming back. Wave 3 comes back, tops eventually, comes back, and then there's a battle between the people who missed out down here, who didn't get in, because they're trying to buy, they're pushing up prices, they're hoping for it to come back to be reasonable, and they'll settle back down, and this becomes what is called the 4th wave, and it generally has an A, B, C, D, E, 4th wave triangular pattern. And once that's finished, you'll find that you can probably draw in a little triangle, and you'll see the market form a triangle and then break up out of that in a wave 5 pattern and complete the entire section. So we get 1, 2, 3, 4, 5. Wave 2 and wave 4 are the corrective patterns. These all have certain characteristics, like, for example, wave 5 can tend to equality of wave 1 with wave 1, and ratios of wave 3 tend to be 1.618, 2.618, 2 times what wave 1 is. So there's relationships in there that you can use to calculate where markets could go to, what your probabilities are of making some money. At wave 5, you have, once you get the breakout of wave 4, you have about a 70% chance of reaching either above wave 3 or either wave 3 or above. And so you generally have about a 70% chance of making money, but you have the possibility is that you're not going to make as much money as if you got on a wave 3. So we've gone through that. We've just seen all of those on a classical basis. I'm going to step through it all the way here again. And just to run through it. So just to remind you, a nice correction ABC pattern, and I seem to be missing a little leg. Now, it's time for you to trade your count on this. And I'd like you to tell me which one is which, what sort of count you would have. And this is called the line chart. And I promised you I'd show you a quick and easy way of doing an Elliott wave count, and that is to just using a closing price line. This is taught to me by Glenn Neely. Would you like me to actually have Glenn Neely come on stage and talk to you? I should have some guest speakers. Maybe everyone's bored shitless with me. Glenn's very good. He's actually a very private person, so it's hard to get him out of that. So Tim's saying coming off the top of wave 5. Have we got any votes here? Where's our counts coming in? I've distracted you, haven't I? That's my ADHD. I get interested in stuff, enthusiastic about stuff. So 1, 2, 3, 4, 5. Wave 4 says Tony. So we have 2 Tonys giving us the drum. Wave 4. Another Tony says, Tony's everywhere here. Okay, wave 4 says Tony, W4 says Tony, and the other Tony says coming off the top of wave 5. Okay, let's go have a look at what that is. We've got a few answers here. So definitely we can see here wave 1, a wave 2, which was a bit short, wave 3 possibly, wave 4, wave 5 up here. Is this something else? Now let's shift a little bit further and look at my solution to the puzzle. Not the perfect solution, but let's look at my solution. So we're seeing here wave 1, wave 2, wave 3, wave 4, and by implication this movement is wave 5. So you might also notice that there's a little spike here. And I want to know which chart this is, please. We'll talk about this later. See if you've got any ideas, you can put it up here. You could call this also wave 1 or a smaller wave 1 of this wave 3. And wave 2 down here. So we could be saying here would be wave 3, that would be wave 4 of the smaller, this would be wave 3 of the higher degree, and so we're looking for wave 4. Whatever it is, the implication is that this probably will go higher in the longer run. And nobody's come up with any idea about what stock it is. So I'd like you to guess which stock this is. Does anyone know which this stock is? AKP? Nope. Mike? No, it's not. No guesses. Okay. Let's have a look at the count on this. This is wave 1, I think, on the downside. This is wave 2 on the upside. This is wave 3, 1 of 3 on the downside. This is wave 2 of 3, which is a corrective wave pattern. This is wave 3 of 3. And this is wave 3 of wave 4 of 3. And this is wave 5 of 3. No, not FMG. Don, I'm seeing it on my screen, which goes through a different one. I think everyone can see that. Is everyone just missing from what Don's seeing? QBE? No. Well, I'm telling you the fractal nature of this market, because this is, yes, it must be a Goldie. Well done, Tony. It is a gold stock, but it is the same stock as we've just been looking at previously. And it's this stock here, Newcrest. No, it's not Newcrest. Newcrest doesn't trade like that, Glenn. You know that. You're a PHG member. And Newcrest, it does look a little bit like Newcrest, but it's not. NST? No, it's not. NST is a beauty. But we'll look at an NST later. So let's go on. I'm going to put you out of your misery. Should I put you out of your misery? It is called SBM, Santa Barbara, whatever they are, St. Barbara. Now, it's been not very much fun, but I think it's coming out of its little tree. Now, if you thought that was hard, and you are a very experienced trader, then this is how you could work with me. one-on-one trading coaching. It's called the Traders Green Room. And it's where I hold people's hands as they learn and trade. It's 6 months one-on-one coaching. It is personal, up close with me. We have 3 two-day live private webinars where we just do 2 people at maximum in the webinar, in the weekend seminar, sorry. We do it privately. It's just us. It's nobody else. There's not like large groups of people. And the mouse actually decides to work. My mouse is not working. I don't know why that is. No idea why it's not working. Let's try a different mouse. There we go. Not working. Okay, so we have weekly coaching sessions, trader hand-holding when you trade. I work with you. It includes 12 months of Profit Hunter Group Platinum coaching, Platinum advice, a value of $12,500. There's only 2 places. That's a bonus that I throw in for tonight only. It means you get 12 months of Profit Hunter Group Gold membership, Platinum membership, which is the ability to pick up the phone and call me. I want to take this trade. How do I do it? That is called the Traders Green Room, as I've said. The price is $50,000. There are only 2 places available at any one time for 6 months. As I said before, this is Santa Barbara, and it's something that I am interested in. Normally, I would not like this stock. Now, I just got, this is from a person who does my forecasting webinars, and what I do is I set the strategy. If you haven't done one, I advise you to do them. They only cost $147, and it gives you the big picture forecast. And Francois said he went 100% cash in my super at the end of April. In fact, on the day it made the high, on the 29th of April. This is based on my forecast. And I went long shares in my 100% super on the 1st of July. I followed your long-term views and big picture trends in my super last year, and this year so far are looking great. Thank you as always for your great insights and calm and accurate assessments of the market, moods, trends, timeframes and probabilities. Now, Francois sent me an email while I was overseas, and he got out of his shares and went to cash on the 2nd of September. Now we'll have a look at what the 2nd of September is on the Australian market. And we'll actually look at the Australian SPY contract. Second, it was actually the 3rd was the top. I got the email, I think it was the 3rd or 2nd. Anyway, he got out at the top of the market. So those are the things I do for the forecasting. Costs $147, or you can become a bronze member and get those 4 webinars a month to get your strategies. I don't have his email in there, but he emailed me. Maybe I'll put it in for next one. So all waves of, there's some tenets of Elliott wave, all waves of similar degree will relate in both time and price amplitude. This takes a while to bang into people's heads, and it's something that develops over time. All waves of similar degree will relate in both time and price amplitude. I don't have time to do that here. So impulse moves follow corrections. It's ebb and flows. I also do used to do, and I will be doing in the next 6 months, I will do weekend seminar that will cost $5,000, and we'll have 30 people in the room, and I'll teach that work plus some of my forecasting techniques in that webinar, in that seminar. First thing is impulse moves follow corrections. That means that there's ebb and flow. So if you've got an impulse move, you're going to get a correction eventually. If you've got a correction, you'll get an impulsive move eventually. So your job as a trader is to work out when things are ready to move, when they're ready to blast out and move. So you make the most from impulse moves, but you get ready for the impulse moves in the corrections or when the impulse move is just starting out. If you're trying to get in on a wave 3, just like the Sydney property market, you can't catch up. You have to go into close your eyes and buy mode, and some people will, some people won't. What happens in a wave 3 is the sellers dry up and the buyers chase limited stock, and that's why it becomes impulsive moves. So what we are looking for you to do is to make it look easier. We want to make it easy for you. That's the whole trick. So if we're looking to trade one type of wave, it's easier to look for the preceding wave type. So if you want to look for wave 3s, you want to trade wave 3s, you want to be searching out wave 2s. If you want to trade wave 5s, then you want to seek out trading when wave 4s are there. Wave 4s have certain footprints, wave 2s have certain footprints, wave 3s have certain footprints. I'm actually pretty reasonable at picking tops. I picked the 1994 top to within 1 day. The February top, there's a top on the 3rd of February. I had to pick the date as the 4th of February, and I had the price, and it was 1 day out on the calculation. Those are the sort of things that I love doing. And that was the top of a wave, actual retest of a previous top, but it was also a wave 3 top, by the way, that went up. So look for that preceding wave type. Now, a full market cycle consists of 5 waves, which you've seen, which are impulsive moves, and labelled 1, 2, 3, 4, 5. And you'll notice the red ones, 2 and 4, they're still part of an impulsive move, but they're the corrective ones. Followed then by corrective waves, which are either 3 waves, a simple ABC, or wave 2 or 4 can be ABC. And if there's a simple ABC, the first wave, at least wave 2, then the next ones will be wave 5, complex. So if this wave 2 is simple, then this wave 4 will be complex. If this wave 2 is complex, then wave 4 will be simple. Here's some guiding rules for impulse waves. Wave 1 and 5 tend to be equal in length. So when you're looking here, you can project up from the end of wave 4 to look at higher levels. In the previous example, you had this. Now, let's look at somebody who had 10 years of experience in trading the markets. And this was a gentleman who really, yeah, I'll just go through this for you. He had 10 years of trading experience. He had been losing money, $1 million of that 10 years, which meant an average of 100,000. Now, he was really nervous, and I couldn't work out why when he came to me saying, why should I do what why should I do your course? I've known you for a couple of years. I've looked at what you've done. I know everything. I've been taught everything. And he was really, really nervous, and I couldn't work out. It was only 2 or 3 months later that he said to me, you know, David, I've been losing money for 10 years. 100,000, I've lost over $1 million trading markets. I've had all this knowledge, But when I put it into practice, I've just done badly. But in these last 2 months, I've made $80,000 following your advice. Now, would you have given up? This man didn't. He didn't give up at that. Would you have given up? Is that a yes? Or after 10 years and losing $1 million, would your significant other have let you? Please raise your hand. Would you have given up? Yeah. I can tell you now he's trading very, very successful. He trades. He has a medical business, which he says now that he doesn't really pay much attention to because he's just trading for a living, and he's winding down that medical stuff. So he's easing himself out of the business. He basically was about to give up, and he joined up. First 2 months he was up 80,000. I didn't realise. Quite often people who are very sheepish come to me because people don't want to admit they're losing money. A lot of people come in with dreams, and I'm not a person who sells a dream to people. I can't do that. I've seen too much in the markets. I've seen where people are given the dream. I leave that up to the people you see on Your Money or Call a lot, the people who are always there with happy smiling faces. I'm there. I find that hard to do. I prefer to work with people who are experienced traders, really, and spend a lot of time in the markets. And that seems to be where I have the most success. So let's move on. Guiding rules for impulsive waves. Wave 2 will only retrace part of wave 1, i.e. not all. Now, sometimes it does go close to 100%. Usually you'll find it won't go anything more than 90% retracement of wave 1. Wave 3 should not be the shortest wave versus wave 1 and 5. So when you're looking at a pattern, and I found this with my one of my Traders Green Room members at the moment. He couldn't quite get the concept of this until I put him up a time frame, and he realised what he was, where his counts weren't quite working, because his wave 3 was the shortest in the segment he was looking at. When you went higher, you could see that with perspective. Sometimes you might want to print out a chart and just stand above it and look down and give you an eagle eyes perspective. Next one, wave 4 cannot overlap wave 1 range on close. The next one is wave 1 and 5 tend to be equal in length. We've already heard that. You hadn't heard this non-overlap before. Wave 5s can sometimes extend more than expected, and there's some debate about that. Are we in a 5th wave extension in this or that? Often you'll find that it's actually not what you think it is with wave 5's extensions. There's one Elliottician I know who's very good. He maintains there is no such thing as an extended wave 5. I'm out to lunch on the subject. I don't mind, because as long as you're following a trend, you're usually okay. So just to remind you, waves 2 and 4 corrections in an impulse. This is another one of the original Profit Hunter Group member. And so markets are a puzzle. David provides, I provide solutions to you on this puzzle. They are a puzzle, because how many times have you stood up and you said, okay, this market is going up, and then you find it just turns around and goes down. Now, I don't know whether you've made lots and lots of money in the markets. I don't know what you've done. How many of you have made the returns that you wanted in the markets? Raise your hands. How many of you made massive amounts of money very easily and kept it? How many of you regret what you've bought and don't know how to get rid of it? how many of you have looked at a stock and said, why didn't I sell that at BHP when it was $48? And why am I holding it at $35? Quite a few hands going up. It's very common for traders and investors to have regrets. They are a puzzle. Sometimes it helps to have your hand held so you can go, what do I do this with? And that's what I do for my Profit Hunter Group Gold members, because any time that they feel they've got a question or a puzzle about a share, they can just type it into the Profit Hunter Group membership site, say, David, I've got Newcrest. I bought it at $11. It's now trading at $10.65. What should I do with it? So they're a puzzle, and I help people. So here's some corrections. They're the key revenue generator for lazy traders. We talked about these patterns before. We notice we call this an ABC pattern. And I'll put this up on the, I'll just use this mouse. Oops, get this thing back. A, B, C. That's a zigzag. That's a simple correction. We saw that in the example that in the classical example. The horizontal triangle is that wave 4 that I showed you. These are patterns to look for all of the time. If you are getting into Elliott wave counting, look for these simple zigzags. The horizontal triangle, they'll help you most of the time. The zigzag will help you most of the time. These are the ones that I look for the most. The flat, the zigzag, and the horizontal triangle, and they're in no particular order. I do not pay attention to double threes or triple threes. I stay away from them. Why do I do that? Because you can look for other things. Look for what is obvious, not what is confusing. This is too confusing. Leave them alone. An irregular B wave was what we saw on the top of the market that in 2010 that I called. And so those are the things to look for. Look for the zigzag first, horizontal triangle second, and a flat if the zigzag isn't coming to fruition. Those are the three that will help you the most. Now, is this useful to you? Please raise your hand if you're finding this useful. Now, by now, you will know that there are things here which you can look for in patterns that will make you money. And by now, you should be having some questions. Do we have any questions about corrections? Helps enormously. Thank you, Stephen. Thank you. Okay, so do we have any stocks? I want to pick gold stocks. I want to pick one person to ask me a question on a gold stock that they're interested in, whether it's in a correction or an impulsive move. I don't care whether it's up or down. That's what we're doing. RRL was the question. Okay, let's go in there. Yeah, Ola says, I find it easy to pick in hindsight. We've got the questions, no need for any more questions, thank you. So RRL, yeah, we'll get to that, Matthew. Great question. I was hoping somebody would get that one. Now RRL, now this is, let's remove some of this junk we've got here. Okay, what we can see here in RRL is a classical ABC pattern. This is a classical ABC pattern. It is shaping up. We can see here when we drop down into, from there, A, B, C, we notice there is a fourth wave in this area here. And we probably have seen an A wave on the monthly chart here. Now, A wave of sorts. We drop down into Regis on the dailies. We see a retracement and this sort of rounding thing. This has dropped back around about 50% retracement on this. Basically, you'd be looking to buy Regis on a bust above 220. We can see this A waves have a particular shape, and we see the market pulling back here strongly, or not. You know, it's being held up. So I'm interested in buying Regis RRL on a break above 190 as a test drive with a stop at 168. And you might be hoping for around about the bottom of this, bottom of that A wave, which would be around about 285. If it gets above there, then it's on for young and old. Now, Ola was saying it's easy to identify in hindsight, but not in real time. And I've just done that a little bit in real time. And down on the dailies, because I haven't looked at Regis for a while, but notice here we're going to put up some charts with some volume, and I want to add some volume to this to look to see whether the volume is doing what I want to see. And we can see here the volume, and this is this will help you. Write this down, Ola, or Ola. I'm sorry if I'm pronouncing it incorrectly. We have some Russian friends we call Ola and Kola. So we see here a bust up in volume there, and this is the daily chart. So we see volume on the upside and then corrective move down. See how the volume is drying up as it corrects. This is how to identify it in real time. This decline is on declining volume, and we can see it breaking through this level here, and okay volume. So I don't even mind it buying a break above $1.85 with a stop loss that can be at $1.74 as a test drive. You see some reasonable volume. It hasn't broken up yet, but those are the sort of things that I'm looking for. So you've seen an ABC, you're seeing an ABC to the downside, you've seen approximately a 50% retracement, which is the B wave. Let's have a look at RRL, and I'll do some retrace stuff. And we'll come back here and we'll have a look for that. Yeah, it's done around about a 50% retracement. My eyeballs were correct. Okay, so when we next look for the target area, we should be looking back up to $220 or $216, that sort of area. So 206 to 216, possibly up to 250 to 266. Now, RRL is asking, is 580 the top of wave 1? The answer is, Andrew, 580, you mean up here? If it is, it's spectacular. It's probably actually, I would say it's probably a bit too deep to be wave 1. I'd say this is probably some sort of B, but so I don't want to get too excited about it. We go, probably you're targeting, you want to just go expectations reasonable. So 266, that sort of area. Okay, let's get moving on the gold stuff. So don't know. Thanks for that, Brian. Good question. I like that. I like RRL. Now let's look at the gold index. Let's look at gold itself. And so now you've got some of the background. I will move a little bit. We'll see what gold's doing. Now, some of you will remember back to a webinar recently where I started talking about where gold could go down to. and you'll all remember that was 1240 or something like that. What we can see here is gold itself. This is the gold price. Hasn't made a new high since a long time ago. I went public on selling it here while I was skiing in the US, right on that top at 1790 odd. I went again public in October at the Traders Expo. Again, same level. Let's sell it up here. And we can see a descending triangle coming into play. So this is called a descending triangle. It's not an easy market to trade when that's the case. So gold itself has some, shall we say, some retardation. I did give a target down to 1250, 1240 as the area to buy in at, and it never broke up above the top of the triangle. So if this is wave 1, this is wave 2, this is wave 3, then this is A, B, C, D, E, where in that possibility of a breakdown in gold from now on. So we have some targets down to 891 in gold if it breaks down. So the gold itself is a worry, but gold stocks themselves have hedging, gold stocks have discoveries. So I'm actually keener on gold stocks than I am on physical gold. In fact, on the PHG trade, we've been shorting gold recently. So what we see is the downside. So we're going to go have a look at what's going on the dailies. We see gold again, maybe down to 1194, and I can draw this a little bit more elegantly from there. Certainly it's not good on a break below 1237. In decline, 1194, stop above 1276. So generally the drift is down. I don't mind trying to buy it if it breaks above 1280 really. That's okay. But the volume to the downside has been destructive. So gold itself isn't going to help a lot of gold stocks. Let's look at the XGD, which is the Australian Gold Index. Now, I hope we get some benefit from gold, but it's really a stock picker's job now with gold stocks. Now gold, 1, 2, 3, 4, 5. No, that doesn't make sense. Possibly it makes sense. This is a long third wave. That's a long third wave. And triangle is in a wave 4 correction. Correct, Andrew. This also is a bit of a triangle here, a little bit of a disturbing one that we get in the Australian gold stocks. There's a lot of side-by-side stuff. So I can't get too excited about gold stocks unless you think of them as a correction. Let's look on the. That was on the dailies. On the monthlies, let's have a look at them again. Also a bit of a triangle with a pattern on this way. So it could. I think that this is an ABC pattern, which could yield it up towards 3,000. And if it breaks down much below 2,100, then you're going to see the next move down. So gold index itself is not the best. Now, the gold index has been dominated by Newcrest, and you'll have a look at Newcrest. And I realize it's now 9 o'clock. Is it all right with you if I go a little bit longer? We'll probably go a little bit, about another half an hour. Just be aware and warn your significant others that you've got something else to do, and I apologize, I haven't. So what we can see here is this is Newcrest, and we see that the rally has not been on great volume. It's been okay. We bought it down here at $7 for a Profit Hunter Group trade, and we moved it up, and we've seen a lot of good stuff here. So at the moment, Don, if I actually stop to label everything, what will happen is that I will actually stop speaking, and it will be a little bit hard because, as you know, I like to do everything on the fly because I'm not got all these prepared webinars on. So here, if you're talking about this one, it's an ABC correction up to $15.75. And you might notice that I can't say something and type at the same time. So we got this one A, B, C, and then down. And there's a little bit of a concern I have. Well, I'm actually trying to run my mouse across it there, Don, so you can see it. A, B, C. On the weekly charts, we can see here A, and I can run this up here and go B, C. You can see a bigger sort of bit more clarity. If it can get up there, that'll be 15.75. That's the target I've been giving for ages on the top side. That would only be confirmed on a break above $11.55. Stop loss would be below $10.15. Now, if we're seeing a breakdown below $10.15, and I've done some analysis for questions with notice, and we'll talk about that later. But if you notice on the downside, we'll see what the volume has been like this week. We see a little bit of reversal. We did have support for the PHG members at $10.40. And, you know, I was talking with a PHG member today, and I said, oh, maybe it's got a bit of a rally up to $11 or $11.20. At the moment, it's found a bit of support. So it's still in this overall B wave. Hasn't broken out of that B wave. And that 11.55 is critical for that. So Newcrest doesn't lend weight to gold being quite so good. Now I'll slip back into something a bit more comfortable, and we'll go to have a look at some of the and I wanted to point out to you this. That's the reason why I called the top in the Financial Review. It was called an expanding triangle, which is an irregular B wave. A, B, where are we? A, B, C. It blew the top. A, B, C. And then the market collapsed after that. Okay, that's Keys, probably our longest profit owner group member. Now, corrective waves have either 3 waves, simple ABC, 5 waves, complex ABCDE. This is a classical ABCD correction before it goes higher. So we get the move up, we get the move down, A, B. B often forms a triangle like wave 4, and internally you'll find a complex ABCD E in there, and then a C wave, and then before the market goes up. This is a classical 4th wave correction, the AB, just to reiterate the pattern, A, B, C, D, E. And most useful Elliott wave things is about this is that wave 4s, 70% of the time they work, they form a triangle and they go up. 4th waves, 50% of traders will be bullish, 50% of traders will be bearish. Now in 2007, I knew that there was a long-term top coming in the stock market. I'd warned everyone that my forecast said that this was the top to sell into, to get out as an investor, to go short as a trader, and hold on for a 3 to 5 year correction to the downside. In August, the market had fallen down sharply, the S&P, based on the first sign of CDOs being trouble. And when I was in the Australian Technical Analysts Association meeting in Sydney, I was speaking to them in August 2007. Everyone was bearish, and I asked them this question: who's bearish and who's bullish? 50% of the people put their hands up for bullish, 50% of the room put their hands up for bearish. And I said, okay, we're going to a new high. And that was the second I decided it. Nothing else. So 50% of traders would be bearish, 50% of traders would be bullish. There'll be a prior fast up move. It's like normally triangle. a 38% retracement is usual. Rocco says, Mr. David, you are Mr. 70%. So we're going to forget about that one. Forget about all of this one. Yep. Here are some stocks that may be ready to break up soonish, and we'll analyse them on the fly right now. I haven't analysed them. I've done the seeking. AOH. Now, we're going to go straight to this software. This software has the capability for scanning this. It's $2,000 in its full capability. One moment, please. David Huntelo. And this will count waves for you. As I said, it's about $2,000 and plus your data fee. What it's doing here is it's saying that it's got a pattern that says that this is largely corrective but has now entered in a wave 1, 2 pattern which may move to the downside. I want to actually take that and see if my scans are true compared to what the machine says. That software, you can run a trial from, if you look at adesk.com.au/software, I'll put that up. You can look at it there and run a trial at it for $80 for the month. It will work with John Robertson's Ideal Financial Group data if you've got an account with them. But notice here you've seen this impulsive move up, AOH, and I believe it's a gold stock. If it's not, it doesn't matter. We can see this little triangle here forming on the monthly chart. So that gives me a tick to the fact that it's going higher. On the weekly chart, we can see that it's going sideways in a particular flag in a fourth wave pattern, 1, 2, 3, 4. So at least it'll have a target towards 25 cents. We can see here that it came as low as at 14.5 cents. Its high up here was 17 cents. So 3 cents up from this low at 21 cents could be 24 cents or 25 cents at a pinch. So Altona, AOH, is a stock of interest for going higher. Notice the volume is coming in, and noticing after this gap up, this third wave, we're getting a fourth wave, lazy move to the side, and you can buy it with a stop below 21 cents. Another one on that list was IGO, which I'm not sure what it's particularly called. It also, the machine also thinks that this is a confused thing, and it's still looking for lower levels in this. So I'm going against the machine when I look at this stock. So IGO, Ind Group, I don't know what that may have been changed its name out of the gold stock. Notice here it's in a little triangle, but the way that it's doing it, I would really require a bust above $5 because you've got your top over here. So it would be a buy and a break above $5 with a stop at $4.28 with the first bust stop towards $5.60 and a possibility of $6.45. Dropping down to the weekly charts, Pony says IGO is going 2 days to dividend. So I think that's probably the best way. I think that's the best way for me to look at things is to buy that break up, and that's good. Often that happens. I'll often say buy the break up, and I don't know there's a dividend, and somebody will say there's a dividend, and the buy the break up makes sense. Where you could be looking to buy this is really the $4.27 area. Your $3.90 area, which would be your normal correction, is really a bit of a wrong place because we've already seen a bit of a five-wave structure. This would be an ABC pattern with a five-wave structure in the C wave. So your best target if this is an ABC pattern, is down $2.10, or waiting for a break above $5. Thanks, Tony, for that. Now, on the daily charts, we see a bit of heavy volume to the downside, and $4.19 would be a place to think about buying it, and if it holds it, stop below $4.09. So IGO is not really the one in favour. Now, the other one is PIR, which is Papillon, is it not? Now, Papillon also has a double top, so you break above $2.90 is probably the best thing to go for. If that's the case, your target's $2.53. Dips to buy $1.47 with a tightish stop at $1.38. We see volume being a bit heavy to the downside, so a break below $1.45 is not the best thing for this stock. So I've given it a bit of an iffy call, and as you can see, again, okay sort of pattern, but where is my wave one here? Wave one, wave one. These look like they're a bit equal, so I'm not so happy buying Papillon. And notice here we've seen some strange behaviour on the downside. So $1.46 with a stop below $1.42 would be your best buy zone. Should it retrace, you can expect back up to $1.74 before coming down. So what I'm saying here is Papillon, and I wrote this morning, first thing this morning, that it was a low percentage. It was, I did like it as a low percentage, high reward trade because it was back onto this area here. Those are the things that I would say would be a good thing to look for. I've just realised why things are going slower here. So this one is a buy. You can buy it with a stop below $1.42, hoping for $1.63, $1.73, given that it's fulfilled what I wrote about this morning. It's actually seeming to run away from that area, but don't run a mile if it's getting out of there. Now, BDR, it also had a good day today, I believe. I saw it listed somewhere as having a good day. This is the monthly chart of BDR. Notice it's chewing into the old tops. So this would be, notice here, 1, 2, 3, 4, 5, classical. A, B, C. We've seen BDR come back the 61.8% retracement. This is the whole thing, as you see. This is a simple ABC correction. So I think BDR is on the list, and we are in that zone. So I like BDR. On the weekly charts, we can see that last Friday's it's thumped into there. It hasn't survived as well. I would like to force it above 52 cents. A force above 52 cents, stop below 40 cents is a deep pockets investment looking for really 66 cents and possibly 87 cents top side. Now, we saw a good day today, but it came back. That's okay. What you can do is you can buy it through 48 cents, hoping for a short-term area at 54 cents with a stop loss at 45 cents. So BDR, I like it. And bottoming soonish, it's coming true-ish. DRM, which is Durain, I believe. And Duray, we see here Duray is okay for a nibble with a stop at $1.53. Notice this, ABC, that's why I'm putting a tightish stop there, sorry, with stop below 53 cents. And I'd rather force it above 67 cents, so I'd leave that alone. OGC, and OGC, we can see OGC is one of the strongest stocks, and it's done a five-wave structure, so we'd look for an ABC correction back down to around $2 for OGC. You're looking to buy down there with a stop below $1.88. So you hit $2.06, that would be the corrective. So at the moment we might get a bit of a rally back up to $3.12 and a drop down to $2.06. And again, also $2.19, the target area. Shorter term rally to $2.82. If it's rejected off there, then hunt down at $2.19. We also talked about VRY and Troy Resources. Here's some tired old gold stocks. AOH is a bit tired, Newcrest is a bit tired, SBM is a bit tired in the shorter term. I think in the longer term for SBM we'll have a look for it lower down. This is important, and I will answer some other questions soon. To trade Elliott Wave well, you need to go with the flow and leave the ego at the door. The way I got that other trader in that had lost $1 million is to stop him having an ego and start him going with the flow. So we want to watch the corrections. We need to hang on for the impulsive moves. We always need to trade with the stop loss and understand Elliott Wave gives you structures and trades even with you when you are wrong. Now, the question is, can you do this in your head? And this is a question that I've received from a person here, questions with notice. He said, Golden Gold shares, and he has all of these things in his head about what gold should do. He understands from the gurus that he listens to, gold feels that physical market is super strong. I know that India and China love to buy gold, but also we're producing a lot of gold. We're seeing a lot of people pumping out gold. Mines that were put in 2010, 11, 12 in a booming gold market, they are now coming into production. So gold production is also strong and prices have gone down. So I don't see gold physical market as super strong. And also saying that these people, paper sellers, are trying to drive it down to 850 towards 800. I do have targets down to 850. You saw those on the charts there before. There are a lot of things going on in these questions. I said that the old high down here at the bottom at $845 is still possible, and saying, is there not a real opportunity cost in holding gold versus cash? There is not a real, it's a statement. Now I think of that as a question. There's a real, the interest rates may be low, but the capital loss between where it is at 1250 and 850 is quite a lot. I'd rather wait till it shows strength. So here are some answers to my following questions re gold. What proportion of SMS should be held in gold, physical gold? He says some people say 25% in real estate, equities, cash and gold. I think you don't put it into physical gold. I think you buy gold shares. Why? Because if you're going to be buying gold, but I think it should be a small percentage until gold really starts moving up. Pick your stocks. If gold got to $2,000, what would per ounce, what would Newcrest get to? I don't think it would get as high as $40 when gold was at $1,800 odd, because the business now has some issues exposed. Maybe the rally is to $30. Is the sector underloved? Yes, the sector is underloved, but company failures are needed before you should aggressively buy gold stocks. I want to see gold stocks fail, and then you start to buy them. So it'll be hard to go up strongly until then. Despite all racks, do you like NCN as a company? Not really, but we have been going long on a PHG trade for $15.75 in that ABC pack. What is likely it will go broke in 2 years? It's really, and stuff like this, language around $10 for 2 years, take off to $40 in 2 years. That's too hard a question for me, especially the go broke question. At what level is it a buy and a put in the bottom drawer? And I believe we saw that at $7. We bought it, I bought it, put it in the bottom drawer for myself. PHG, we're continuing that theme. Now I will stop out at $8.65. I'll have made some money, but I like to hold on for a long time. I've sort of been a bit trading around that. At what time is it to close your eyes and buy? That's on a break above $16 with stop below $14. Where will NCM be in 24 months? At some stage, $15.75. There's some options questions. On the next big panic, that's when I would buy. That would be when I would see gold drive down as well. What point central buying out of the money call? Say 12 months out, $20. On the next big panics, we got too long for them. So we've covered Beetle Resources already. This is another question with notice. We've covered Beetle Resources. The next one is Silver Lake. Is now the time to buy for the long term, or should we wait until Silver Lake falls to around 33 cents? Now, let's pick up Silver Lake and let's do a count what the machine thinks Silver Lake is doing. Tony, I'm thinking that your sound is buggering up. Mine seems to be, I'm hearing mine coming back through my sound check, which goes out into the net and comes back. Let's pick up daily. That's Silver Lake. Now let's go through my process and then we'll go to the machine. Now my process includes a software that costs $3,300 plus the Elliott Wave. So it's about $5,000 in software costs if you are to replicate what I do. For a Profit Hunter Group membership, it's generally $5,000 for the year, plus you get my advice and to see me do this real time. Now Silver Lake, we can see here, Silver Lake should come back down to about 35 cents again. It hasn't been setting the world on fire. Let's look on the weekly charts. Again, lack of world setting on fire, volume increasing. About 35 cents would be a nice place to have a look at for a longer term basis with the stop below 30 cents. Now what we can see is it's trending to the downside on the dailies, and it's not the time that you want to be. You want to see it close above 44 cents for it to be good, or wait for new lows, possibly even the 29 cents area. So I'd be thinking about 35 cents first, stop out a little bit below that, then maybe have a go at 29 cents. So Silver Lake would be, and in terms of the question, is a PHG member, it says to around 33 cents. And you can see how people learn when they're Profit Hunter Group members, and his question is wholly appropriate. Okay, so now last one we're going to look at, and this is one of the ones that I have considered the strongest of the gold stocks, and it's a stock called NST. And then we'll move on because I have some specials to offer you for Profit Hunter Group membership. Would you like something special, or would you like okay, so NST. Now I've been looking for NST and for a PHG trade to buy down towards $1.41 to $1.42, $1.38. $1.38 is the best area for buying into. As you can see, it would be resting on these old tops, and we can have a stop loss below $1.30 stop close only. On the weekly chart, we see $1.38. That area is the right zone. So again, forming up a triangle, so we should have one more release to the downside. We pick it up $1.41 to $1.38 with a stop below $1.30. Now, when you say, is this a wave 2 correction, one of the things that we're seeing here is a lot of volume. So we will be tight on managing this. We'll see 1, 2, 3, 4, 5. That makes it difficult, Andrew, and that's the art of this, is that we'll be looking for this down this area. Maybe $1.38 is better. I think that is better given the pattern. And what we will be doing is looking for a corrective rally probably up to $1.70, $1.65 at best before another move down. So I'm cautious about NST. I like it in the shorter term. I'm cautious about it. I like it in the shorter term to medium term. I'm cautious about it in the longer term because of the way that it's come down. Okay. So my question is to you is, can you do this in your head? Is this something that you can do easily, fast? Please raise your hand or say yes. Can you do this really snap bang? I can do this in 2 minutes. This is what I do. I do it in 2 minutes. And if you can do it in 2 minutes, that's awesome. You don't need me. If you can do it in 30 seconds, then you don't need me. But if you're too busy to study 20 to 50 shares a day in the ASX, you can join Profit Hunters. Now, I process 20 to 50 shares for my members. I process stock indexes for my members, commodities, Forex, all using my methodology. These softwares worth $5,000, plus the data, plus all the experience of 30 years. How long will it take you to build up that experience? So if you feel like that, join the Profit Hunter Group member. Bernie says, I can follow when you do it, but then it's impossible to do it alone. Exactly. So can you do this? Can you get that ratio of what we've been talking about? So here's some price objectives. The fourth wave is often 38% of wave 3 range. Wave 5 target, wave 4 end, plus wave 1 length. Wave 1 often retraces 50 to 70% of wave 1 with a tendency to wave at 61.8%. Wave 3, 162% to 262% of wave 1 from wave 2. It gives you good risk-reward ratios. You know where to get out, where to get in, and where your potential price objectives are. And you also know when it's gone to hell in a handbasket. So if you need more information, do I have your permission to talk about the Profit Hunter Group? Where are you now in your trading? Did you make enough money last year? Are you making enough money this month? Have you ever got into a trade that you shouldn't have? Have you ever been confused as to the direction of the market? Have you ever been stumped as to where to put